Well, that's right. As we enter a whole new day in trade, let's take a look at the global cues from last night. Now, of course, the US had a muted session. Stocks barely went up. They finished in the green, but let's remember at one point they were in the red. So in that sense, it was a bit of a choppy session. Traders are digesting a lot of factors right now, possibly higher interest rates, additional stimulus, vaccine distribution, and not to mention the political turmoil which is happening in the US right now with Trump's impeachment as well as the attacks on Capitol Hill. With all this being said, Biden, the new president, is planning to push forward the next round of stimulus, $500 billion of additional spending in unemployment benefits, stimulus checks, funding for healthcare, should all be on the anvil very soon. And that's, of course, going to get various asset classes, whether they be real estate, gold, silver, oil, or equities for that matter, excited. So the Dow was up 60 points, Nasdaq was up 0.3%, S&P pretty much closed just above the flat line. The yield on the benchmark 10-year US, that shot up to 1.18% yesterday, the highest since March, which is a bit concerning. So we'll see how people react to that. On the back of this same thing, though, Treasury yield spike. Credit Suisse advises switching to cyclical stocks, including financials as one of the key plays, as well as energy stocks. Rising rates could hurt your growth stocks, so keep that in mind. A number of tech heavyweights, including Facebook and Apple, actually declined in trade yesterday. Now, in terms of what the rest of the world is doing, Asia is fine, pretty much flat. Nikkei is flat, Topix is flat, Korea is up around 0.22%, Australia is dipping around 0.2%. Europe yesterday closed pretty much okay. Stoxx 600 was flat. Auto stocks did well, utilities fell, gaming stocks did well, and there was some M&A deal action as well. Oil prices are the only area which are clearly showing robust momentum. Yesterday, crude touched $57. Inventories fell for the fifth straight week, and Saudi Arabia will be cutting an additional 1 million barrels per day starting February. So this has got prices really excited. Like I said, Brent touched 57 but closed off the day at 56.5, and WTI is not too far behind. It was $53.21 per barrel. So oil outlook significantly enhanced in the last, let's say, 4 weeks. And then gold prices edged higher yesterday as well. Of course, you had US dollar impact, treasury yield impact. So prospects of higher inflation driven by more stimulus are also going to aid prices. So spot gold was up 0.2% to around $1,848 per ounce. On Monday, they had touched the lowest level since December 3rd. And then US gold futures yesterday were 0.4% lower at $1,844 per ounce. So that's how the global wrap looks. And if you want to take all of that into account and look at the Sgx Nifty, as of now, what it's showing on the screen is 14,640 is within reach, a 52-point gain or a 0.36% gain for the Nifty. Let's see how we wind up in trade.